A strong business rests on strong financial habits, yet many founders find this area intimidating or easy to postpone. Numbers tell the truth about the company's health and understand what makes them grow and what makes them not grow. Chidi has worked with a wide range of businesses over the years, gives him the support and the insight and the behaviors needed to support stability and growth of many businesses. His approach is literally on focus, clarity, and discipline, a bit like when he goes to the gym. The financial thinking behind the market and also the financial thinking behind the business. Today, we'll look at the patterns he sees in most businesses, whether successful or not successful, and what disciplines can we apply to demystify the finances that people need to understand within the business. Welcome once again to the podcast. Today, we've got Chidi. I'd like to introduce him. Chidi, tell us a bit about yourself. What do you do? And just a bit of background, really.
So I'll describe myself as a dream chaser. And that's by helping businesses chase their dreams using financials as a tool. Behind that, obviously, is accounting. So I've got an accounting background. But that's really the drive.
A dream chaser, yes. That's quite different, isn't it, looking at it? Most people say they're either entrepreneurs or they're growing businesses. So a dream chaser. Someone comes to you with a dream and an idea. How do you position them to put them in the position where they can have that dream come true?
I think the first part of that is trying to get people to visualize that dream. A lot of people start off in business and they say, I want to set up my own business. I'm going to do this, I'm going to do that. And then you start operationally getting stuck into it. And that just becomes what you do. But it's really getting people to understand or be clear on where it is they're trying to go.
So the definition of a dream, so I understand this. This is new to me as well today. The definition of the dream is growing something, building it, having the vision, but then you're providing a certain bit of backbone to get over the line?
It's really about bringing that dream into a financial structure.
Okay.
Right? Putting a financial, like coating around a dream.
So I was thinking about it earlier, and before you came on today, I think, okay, where can we position Chidi, the virtual focused accountants? How do you guys work? How do you work with us? Because we're a brokerage, right?
Yes.
So we help clients raise liquidity, understand where the gaps are, how can funding help support businesses grow, develop and expand, or even survive, right? Mm-hmm. So what advice would you give a new startup on how important is an accountant, or how important is it to have a good accountant?
Still on that dream theme, what your accountant would help you do is be clear on the goal, right? And I won't spend too much on this, but really the goal in terms of time and money. And then wrap the tools around how you can measure that goal and strive towards achieving that goal.
But then certain startups out there, people who are watching this and watching our video today and hopefully listening to it, you're a startup with limited cash flow, limited resources. And how can they justify paying for an accountant? And what value does a good accountant bring to the table? And this is especially in the world of AI right now, where a lot of people feel that I can download Xero or some sort of software and manage it myself, right? And that's where, from a startup's perspective, there's tools out there, digital tools, you can make it do yourself. But what value does a human touch bring to the equation?
You touched on a few things there. That's why I'm smiling, because the challenge we have with accountancy packages and the idea that actually I can just do this myself is we get a lot of people come to us when they've started it and they've got it wrong and then we have to fix it. So, and I sympathize with business owners. When you start, you haven't really got the funds to start investing in this and that. You have to really be intentional about where you put your money. But I think having seen, businesses who are profitable run out of cash and fail, I think it's very important that from the get-go, you understand what you're doing financially and you have the right setup.
And the advice, right? So right now you go to an expert in the industry. And we have a similar situation in our broking world as well. When clients come to us when things are not going so well, or if things are going well, they're looking at how to revamp it and tweak and change it. We always say that, yes, in a world of digital formats, can you do a lot of this stuff yourself? Yes. But the biggest challenge is 3 out of 5 people apply for the wrong product. When they're going for a business loan or a working capital loan or even a mortgage or something to go with it, they're applying for the wrong product because they don't know how to position it. Pretty much the same way when someone's doing their accounts by themselves, they're not filling in the right boxes. They're not understanding how to fill those tax forms. Everyone's looked at those HMRC forms, right? The book. I remember back in the day, you do your self-assessment, a big, massive book arrives, like 22 pages or whatever. You don't know what you're doing.
Correct.
And then you go to an accountant. Yes, they charge you something, but ultimately, they're there to guide you and support you. These are parts of the business toolkit or the business gym kit. You could look at it in one aspect, right?
Yeah.
Where you need these certain things to get your business off the ground, trading, and just in a profitable way. What we found is, I don't know if you agree or not, that a lot of people they know how to run businesses, right?
Correct.
They're great operationally
Yeah.
in terms of the actual physical work.
Yeah.
They can go out there, get the job done. But you give them any back office task, and I reckon a good 95% of people fail at that.
100%. And where it's a tragedy is when they don't believe that they need it.
Exactly.
Right.
So they, in their mindset, is I'm going there, I'm doing my job. And say an average, we use an example of a plumber or a builder or someone, a small SME. They're on the tools every day, doing that work. They're quoting the jobs correctly. They're thinking they're making margin, but the back end is just not sorted out correctly. And where does that leave them? In the hole.
Correct. Because I think right at the start of a business, before you start, you must put the emotion aside and the optimism. We've all got to be optimistic, but you just got to put the emotion, put the optimism aside and let the numbers guide you towards what you're about to set up. Like what are the numbers telling you?
Numbers don't lie.
They don't lie.
Income, outgoings,
Yeah.
they don't lie.
Yeah.
And you can sit there and deceive yourself in the process, right?
Yeah.
And a lot of people this week, it's really critical. And accountants, without being rude, often get a bad rep because it's boring. It's just tax mitigation and this, that, and the other. And most people it goes over their head.
Yeah.
And some of the terms HMRC use, it's just mind-boggling, right? But in terms of, for new people out there listening to this today, how can we simplify this? How can you make it really understandable for someone starting a business and why they need to come see someone like yourself?
Yeah.
And then ultimately, once they've seen you, they come back and see us again because we can support them once the numbers are in place, right?
Yeah.
So how can someone who's starting off, what's the 3 bits of information you could give somebody today when they're starting off and why they should come see an accountant?
I think there's some basic things that every accountant must do and do well. Number 1 is making sure you are in the right structure for your business. So whether it's sole trader, partnership, limited company, make
So
sure
the basics there, right? Just the simple structure.
Just-
When someone mentions structure, people get confused. There's trusts and SPVs and all these weird jargon. Some people like to get sound. I think some people like to feel that they're very confident by giving big words.
Exactly.
All right, and they're trying to justify their wealth
Yes.
or their earning fee at the end of the day.
No, correct. And I think you've got to be as and this is for every accountant, you've got to be confident in your own skin and just say, look, I'm actually more valuable when I make this as simple and clear for you to understand than trying to talk about the titles and trying to give all the buzzwords, because that just confuses it. Ultimately, my goal is to make this as simple as possible for you.
And what simple 3 buzzwords should people look out for on the positive side of things that makes it really critical for them to pay attention to?
Cash, profit, and tax.
So cash would be, just so people understand, obviously from an accountant's perspective,
Yes.
there's certain things you take for granted. Liberty of knowledge, right?
Yeah.
So cash, would you say it's more income?
This is starting to sound a bit accounty.
No, but see, these are little things that people need to understand.
No, correct.
Not people need to understand, but there's an element of education that comes into play here right now.
Yeah.
You're using a buzzword like net cash flow and gross cash flow.
Yeah.
And to most startups, that's daunting.
No,
But let's bring it right back to basics. So simplify it for me.
No, 100%. So one of the big differences we have is the difference between profit and cash, right? So as a human, I go to my bank, I put, maybe people are not doing that so much, but put my cash point in the cash, put my card in the cash point, and then I see how much cash I have, and then I go spend. That's just how it works. And I think that's how we operate as people when we get our first bank account. And then you own a business and you carry on operating in the same manner. But the challenge is you then have all these other things that come into it. So people think I'm making profit, So I have money. So now I go and spend that money. But in your profit, there are just some nuances that mean that your profit may not equal your cash. As an example, simple example, you've sold something, you've invoiced it, and it's in your profit statement, as in your revenue's there.
Revenue's there.
your
I've sold an
expenses
item
are
for
there.
£100 plus VAT.
Correct.
So it's worth £120
Exactly.
in my account right now.
Exactly. And I've got some expenses, and then the difference between my revenue and my expenses is my profit. But actually, that person hasn't paid you.
Now it becomes a cash flow situation.
Now it becomes a cash flow situation.
But you've obviously paid for your supplier to have those
Correct.
goods to be delivered, right?
Correct. But also on the top of that, you've had to buy this equipment, or you had to buy this stock. But that's not in your profit number.
No.
But cash is cash. Cash. The story of cash is simple. It's what goes in and what goes out.
So on that example, you've bought stock. So that's now an expenditure for your business.
Correct.
To service a client that
Yes.
hasn't paid you on time.
Yes.
And this is a common problem for most businesses, right?
Yeah.
And we're using a simple example of £100. It makes it easier for numbers to work with. At that point, they have either 2 or 3 options. One, they cash flow themselves out of it by taking savings and putting more money back into the business. 2, they borrow.
Yeah.
From people like us. We support them in that process to find you a lender that gives you, say, stock funding,
Yeah.
invoice financing, other things to protect your business. Because imagine you had 5 or 6 clients didn't pay you. Now you're in a hole.
Yeah.
You've got staff to pay. Your suppliers need to be paid. Because if your suppliers aren't paid on time, challenge you're going to have now is they won't be able to deliver a product for you when you want it again.
Correct. And the extreme side of that, which I've seen twice, is you can actually go bust.
When something like that happens,
Yeah.
emotionally, how do you deal with it? And secondly, emotionally, how does a client deal with it?
I think it's insane. Like you can't even imagine somebody building a business. And the first time it happened to me was sort of a new client, and it was out from VAT. So this is a VAT registered business, and the way VAT works is you charge VAT on your revenue. And so when you get that money, so instead of you charge someone your service £100, you charge them, invoice them 120. But 120 comes in, you spend 120.
Because cash flow is not being... So you're going back to the original concept we talked about cash coming into the
Yes,
business, right?
yes.
You haven't allocated the debt proportion on it.
Correct.
Or your liability proportion, right?
100%.
And this is not trying to bog people down in technical terms.
Yeah.
But it's simple ways. You've charged VAT, thus therefore you have to pay VAT.
Yes.
Back to the HMRC, right?
Exactly.
Unless you've got expenses to offset it with, and etc. That's a different conversation altogether, right?
Exactly.
That's something we can get into later on.
Yeah.
So they've spent the VAT money.
Yes. And that's something that you do at the start, but the bigger you get, then that, someone starts going 250K, 500,000, and then that problem becomes massive.
Yeah.
And all of a sudden you find yourself in this hole because you're just seeing money in the bank and then you're spending it. And really then you get into this position.
But at that point, HMRC do give you a couple of options, right? At that point, and this is not trying to sell any services or say there's a good thing or a bad thing to go with it. And this is from personal experience with the clients I work with right now. At that point, HMRC will give you something, time to pay.
Yeah.
They'll give you a credit line. But the problem with those situations, if you get involved in a time to pay situation, yes, your accountant will say it's a great idea.
Yeah.
Because there's less work for them, right? It puts a marker on the business and a red flag against you.
Correct.
So now you're in a position where you're on the back foot every single month.
Yeah.
And you're in debt with HMRC, and that debt's never cleared. It's just a very complex place to be, right?
Correct. And also, it's human nature, right? So the reason why we have CCJs, the reason why we have debt collectors, is there's a tendency for people to be faced with a challenge, and you just go in a hole, right?
You go in a hole, and you take the path of least resistance, right?
Yeah.
So you go to HMRC, you go on a payment plan with them. So then you're in arrears 3 months, then 6 months, then 9 months. Before you know it, the debt's so big, HMRC winds you up, right?
Yeah.
When it gets to that stage, and this is where we've worked previously in the past, right? When he gets to that position, the accountant needs to reach out, or the client needs to reach out to a broker like us.
Yeah.
The reason why we can find funding solutions within the cash flow of the business to get out of that hole, put systems in place.
Yeah.
I think we spoke about this in one of our previous podcasts before, not with yourself, but with another business owner, about having 2 or 3 separate bank accounts.
Yes.
The reason why people do that, one is your operating bank account, where you operate your day-to-day business from, where you pay your suppliers, anything else go with it. Second bank account is for your debts and liabilities.
Yeah.
So your HMRC debt, your corporation tax.
100%.
You kind of allocate a little bit every single month when it comes in from there. So this is where an accountant helps position these values. That at the end of the month, you reconcile the numbers, saying you made, say, £1,000 a month in revenue today.
Yeah.
Cool. Out of that £1,000 a month, £200 of it was VAT,
Yeah.
which you've claimed. Thus, you need to allocate to this bank account. The minute you tell someone, they understand it. And the third bank account is more of a long-term growth plan. So you've got extra profits you don't need to operate your business with right now because you've cash flowed things correctly. Put it into a third bank account so you know how the business can expand and grow.
Yeah.
But the challenge we've noticed over the years is that some accountants do not give this level of advice.
No, 100%.
You know, and the reason why I ask this question, I know you're an accountant as well, but why do people not do this?
I think, you know, if we go back in time, right, not too long ago, but accounting was mainly manual, right? And so,
But the abacus era, yeah?
you know, we would send the pigeons with the invoice.
No, exactly.
But more recent than that, you used to have people go with a box of receipts at the end of a period and give it to the accountant, and then the accountant has to model through that. And that took time, right? That took so much time that all the accountant is going to do from that, one, that data is obsolete anyway, so you can't really do anything with it. But two, just that's all the time that he or she has, right? But now, we now have all these great tools in the market that means that we can bring in, you know, your financials up to date, real time almost, is not as tedious an exercise as it used to be.
So that's where they talk about making tax digital or whatever, right?
Well, making tax digital is like a rule in itself.
That's
right?
a whole different conversation.
Yes,
right?
a different conversation.
We'll leave part that one side for today.
But I mean, but in the same way, digital, like, which is why we're called virtue focused accountants, because we're trying to take away, or we've taken away, that whole manual, in person, hands deep in
So
paperwork.
you've actually evolved as an accountancy practice.
Correct.
So you've had evolution come through in your business, right? So you've
Correct.
taken technology and grown with it and evolved with it and embraced it.
Yeah, we've been set up that way. Yeah, that's
So
right.
you built your business ground up to be a modern business, right?
Yeah.
So most businesses out there are not geared that way, are they?
Not enough of them. Not enough of them, because I keep meeting clients and not getting this level of support. Or sometimes maybe they are, but they just haven't really spent time understanding that we want to, like, going back to our cash flow conversation, rather than come to you and say, this client's in trouble, they need funding. How about we forecast, we use updated financials from the business in and out of all the cash flow and look forward. We look forward 6 months and say, what's likely to happen in the next 6 months? Have you got this marketing spend? Have you got this big stock? Are you expecting, you know, we can scenario plan and say, what if it's up? What if it's down? And then we come to you and say, Nelesh, this client has a hole in 6 months' time where they're going to need 40 grand.
Perfect. So this is where clever accounting comes into play.
Yeah.
This is where having an open conversation with your accountant, looking exactly where you're working. So there's 2 things you need to be honest with your accountant. Be honest with your accountant and your solicitor, right?
Yeah.
And that way, collectively, we can all work together to work what's the outcome for the business. Because the whole entity behind all of this, right, is that the business survives, business grows, and it thrives. And if there's a challenge coming forward, you'd rather know it now than bury your head in the water. And I've had clients come to me at the nth hour when nothing can be done, unfortunately. You know, if they came to me 6 months prior to that, there's an opportunity we could have looked at X, Y, Z, spoke to the accountant, looked at the MI. And this is again really kind of a technical podcast, which wasn't the outcome. Like, we weren't here today to kind of sit there and say, you know, this ain't you balance your books and go really technically detailed about it. But unfortunately, it's just where the conversation's gone today.
Yeah.
And it's been very valid in terms of, look, somebody can take something away from here and understand that, okay, these are the reasons why you need an accountant.
Yeah.
You know, when the days are dark, what do you do?
No, correct. It's really about, a lot of accountants use the word proactive a lot, but it's trying to live it for what it really is, which is not just on the accountant's part, but also on the client's part. Because when we talk about proactive, what we're really talking about is let's get ahead of the curve. Let's try and do things early, and let's try and plan and forecast and look to the future. What that means is it helps your survival, it helps as the client, it helps your growth, but it also helps with tax efficiency, because then we can plan and we can really understand.
And that opens up another that opens up another part of the business that people haven't thought about.
Yeah.
Because once you start creating wealth, you start making wealth.
100%.
And once you've made the wealth, where do you put it?
Yeah.
You can either spend it in taxation or look at other systems to go with it. And that's getting to the really nitty gritty about business, right? But then I've got another question for you, though, on a slightly side topic. The budget was announced yesterday.
Yes.
How does that affect people? It's just a very headline way of looking at it, right? Because obviously this morning's paper is a lot of scaremongery. It's going to affect everybody in the marketplace. But then when you actually physically sit there and digest the information, who does it really affect, and how's it going to affect your clients specifically?
So I think in terms of the budget, we're in 2025. A lot of there have been a lot of big changes that have crept in for business owners, and they've kind of just come in drips, and we haven't really talked about it. For instance, like dividend, the tax-free dividend. So we used to have £2,000 was a tax-free dividend that you could take before any tax, obviously. But from this year, it's £500. Went down to £1,000, but now it's £500. You had what used to be called the employer's relief, which is where you can dispose of a business and pay income tax of 10%, or it's not income tax, but it's like a capital gains tax of 10%. From this year, that was 14%. Next year is going to be 18%. So there have been these things that actually we should be more focused on, like your NI for a company which employs NI, which the threshold went from 9,000 to 5,000 this year. Those are things that have already been in effect.
They're there, but would you say people have not paid attention to it, or not thought about it, or the above?
Well, I think when there's a budget, everyone really focuses on the budget. But then we kind of, all these things, we talk about, oh, potentially this is happening. But when it happens, then it becomes, people haven't really because you talk about when the budget kicks in, they say this is going to happen. It won't kick in till April. And then we just forget about it.
And come April, it becomes a normal part of the business.
Exactly. Because what happens is when the budget's announced, you actually don't feel a pinch in your pocket.
But the mindset changes, though.
Yeah.
And that's the difference. I feel the budget gets announced in November. People start panicking until, say, January. Then they forget about it.
And then when the actual hit comes in,
it's old news by then.
It's old news.
And that's the challenge, right? This is where people get so scared and frustrated by having a team around them, whether accountants, solicitors, lawyers, solicitors, brokers, people in the money mindset can educate them and say, it's okay. There's ways around it. Everything's workable. It's not a situation where nothing is fixable. There's always going to be an angle and always going to be a solution around it.
Yeah.
And that's what I want to touch base on that briefly anyway.
Well, and I think, there would be a lot of downplay in the budget this year because things like a lot of the thresholds have stayed the same, like your NI and the like have stayed the same, but they've been the same for years now, right?
But now they made an issue out of it, right? And now they've made a big song and dance about it.
Yeah. But the reality is that you have, like when we talk about a high rate threshold of 50K 3 years ago, it's not the same 50K, right?
Inflation's come
in, right? But you're still paying 40% tax at 50K. So maybe to actually keep it the same in true terms, that threshold should have been raised.
In line with inflation. But this has now become a very technical conversation, right? You know what I mean? It's the opposite outcome of what we're trying to do. But ultimately, this is where the logic disconnects, right?
Correct.
And if you think inflation's at 3 or 4% a year, they're saying 3.9 for next year, right?
Yeah.
All those thresholds and all those allowances should have growth to go with it.
Yes.
And this is where the market's disconnected. And this is where talking to an accountant can educate you where you really are. Because you can read a headline in the paper. You can read information out there and make your own judgment on it. Go into ChatGPT, look at Google, all those kind of things to go with it, right? But when you sit down and talk to an expert and he puts it into true perspective, and what I mean by true perspective is how does it affect me personally?
Yeah.
How does it affect me as an entity? What's the good, the bad, and the indifferent?
Correct. And I think it's, the real headline of all of this is we are in a difficult market, right? The tax rules are quite stringent. There's a lot more investigations now. And so when you scour the budget or the landscape for a business owner, it's quite difficult. So really, my advice would be to focus on actually building a better business.
So building a better business, not necessarily building a business by just having more sales, but having a resilient business,
Correct.
right?
Correct.
And we spoke about this in a previous podcast with another guest we had about resiliency in a business. How important is resiliency in a business, right? And for you, a question I have for you right now, Chidi, is what makes a business resilient?
For me, it's the cash is one thing because cash is survival, but it's really understanding how the true performance is of the business. You'd be surprised the amount of business owners who, a lot of them wouldn't actually know what they made last year in terms of turnover. But the ones that don't actually know the other sides. And I don't want to get
So it's like monitoring.
It's monitoring your
having little key
performance.
indicators.
Correct.
Like you look like the kind of guy that trains a lot, right? Like you enjoy your sports, right?
Exactly.
And you enjoy cycling.
Yes.
You've got a smartwatch, so you track everything, right? So
it.
you're monitoring your heartbeat,
Yeah.
how quick your lap time was, all your stats, right? So you're constantly looking at data.
Yeah.
So in a business marketplace, and I know we spoke about this before, but I really want to just give someone something to take away from here. What 3 things or 3 indicators, in layman's terms or simplest way of looking at it, what 3 things should people look for when looking for indicators on their business?
I'll try and be not as accounty as
Exactly.
This
I don't see accountancy. I will give the accountancy hat.
yeah. Yeah.
Take the accountancy hat off. Make it so
Okay.
nice and simple.
A cafe, a high performing cafe, will sell a cup of coffee, and that cup of coffee, they would charge, let's say, £4, right? So, cup of coffee for £4, you'd have to understand and you could sell those coffees all day, but then you have your cakes, your muffins, the biscuits, the lattes, the matchas, and all that kind of stuff. They're all different things. How do you understand which of these, like to understand how they perform, not just in revenue terms, it will give you an insight in terms of how you approach them. And performance, I mean, here's my coffee, £4. How much is my beans? How much is my cups? How much is my milk, sugar? And then I get to a margin, a gross profit, right? Gross profit. So when I understand the gross profit, even if it's just as a percentage, then I can compare it to others. Then I can compare it to the market. That's why you go into a shop and you see this thing as an offer, you buy this and you get this. It's because they're trying to push. They've realized actually there's more margin here, right? And again, it's revenue less the costs of that revenue or cost of sales, as you call it. So that could be in a different business. It could be.
It's the value-add service you bring to the table. Right?
Correct. Right.
So you could be, and I think I read something similar about cost. Not cost. I think it was one of the other chain coffees out there. They make more money out of the cakes than the coffee because the margins are higher.
Exactly.
But then you're there, right?
Yeah.
That's it. So when you go to the supermarket, you're not buying. You go for milk, but you come out with 5 different things.
Yeah.
Stuff you don't even want, but it's there, right?
Yeah.
So from an indicator, we'll go back to the initial question. The indicators for a business and what they should look for.
Yeah.
Is money coming in, money going out?
Yes.
Is it people paying on time, people not paying on time?
Yes.
And what? Sorry, go on.
Yeah. So you have the first one. I will highlight is your margin, your gross profit. You need to understand it. You need to understand how your products or services are truly performing.
So your gross profit you work out by knowing what your expenditure is.
By your revenue, not just expenditure for the business.
No, for that particular product.
Specifically for
Specific to the product, right? So let's go
Right.
back to the coffee example.
Yes.
You know specifically I need to spend 30p on beans.
Yeah.
Forget how much the bag costs.
Correct.
This particular cup of coffee, so you break it down per deal.
Per
So it's like when a builder's quoting for a job,
Correct.
they need to break that job down.
Materials, subcontractors.
Exactly.
Yeah.
But then that particular job
Yeah.
has a set profit margin on it. They know that
Yes.
once I complete this job, I've got
Correct.
this much profit in the deal.
Yes.
So you can bank it. So you
Yes.
know this particular job is good for X, Y, Z.
Correct.
Then you can move on to the next.
And just to be clear, that's separate to all the general business expenses, all the rent, all the marketing is separate to all of that.
That's a global business
Correct.
expense, right?
But just that margin, it really lights the path for you in terms of understanding your pricing, in terms of really focusing on where we find improvements, whether this is sustainable, any risk you carry. So that's margin. Then the next one is obviously cash flow. You need to know what's coming in and out, regardless of what type of activity it is. Money in, money out. If you can look forward with that, then you really have a sense of where you are. Then you can plan for, as you say, you can set up pots, you could plan for your VAT, you can plan for any kind of investment that you need to make.
Any abnormalities in the business, things go wrong,
Correct.
Plant machinery,
Yeah.
tools go missing, or you need to buy more equipment.
Yes.
Quick question for you. In business, right, where does a mindset work here? And what's the thought process behind that?
I think the mindset is really around changing from what a lot of people have picked up from education, from past experiences and working, in terms of what we're used to a very safe space. And so when you go into business, you're kind of going against that grain. And so really, it's something that needs to be addressed.
So you mean mindset of an entrepreneur or mindset of an employee?
Mindset of an employee and then converting that to an entrepreneur.
So most people who start off in business,
Yes.
either traditionally you've got a job, work for somebody for a number of years and have had certain securities and certain processes taken care of.
Correct.
When I was an employee, marketing was dealt by somebody else, HR was dealt by somebody else, and your responsibility was just your responsibility. But as an entrepreneur, everything sits on your desk, right?
That's right.
And that also comes into not just mindset about how to run the business, but the mindset about getting up, keeping motivated, the drive, the dark days.
Yes.
A lot of people don't talk about this, right?
Yeah.
And you've been in business a number of years.
Yes.
And I think I touched on this previously with one of my other guests earlier on about the darkness of business. And then for me, it's quite an interesting conversation piece. The darkest part of people's businesses, how do they get out of it?
Fear, overcoming the fear, identifying when you need to tap into the right resources, and just the self-discipline. There's a lot to unpack in terms of business. It's like getting fit. When people start to get fit, you can say, oh, my trainer's going to do this or this person's going to do that. But really, you have to be the one that will motivate yourself day in, day out.
As an entrepreneur, it's all on you.
100%.
It's a lot of pressure, right?
It is.
We've spoke to life coaches before and conversation about that as well. Often it's a very dark place.
Yeah.
When things aren't going well. And I don't want to keep on saying, all business is bad.
Yeah.
But there are elements of this. And at that point, who do you turn to, right?
Yeah.
Some of your friends down the pub may be employed, so they don't understand the struggles you've got. Your partners may be employed. They don't understand the struggles you've got. The only thing you have around you is your peer groups and your professional bodies that you work with.
Yes.
In the peer groups, I mean by people in business with you. Some of them want to see you survive and some don't. At that point, how do you get up and do the next thing?
It's like a resigning, because what happens, a lot of business owners, you leave a job and you go to essentially what's like another job. A lot of the times when you start that other job, which is meant to be your business, it's actually a lower paying job. and it's more stressful because you take it with you to sleep, you take it on holiday with you. But really, it's resigning from that new lower paying job and employing yourself as an entrepreneur, as a business owner. And that means always standing back and trying to assess what's working, what's
Is that
not.
what you tell your clients, yeah?
Yeah, and leveraging the people around you, peers, as you mentioned, right? Professionals, whether it's marketing, whether bringing the right people in, and just keep moving.
And you believe in that, yeah?
100%.
You do the same for your business right now?
I do. It's not a magic. It's not a magic. It's a constant trial and error process. It's a constant motion
It's
forward.
not just a magic one you wave once and you're done and
No,
dusted.
no,
It's
no.
every day, right? So you suffer the same thing as well every day, right?
100%.
Right. So these are normal things that people have, right? Not
Correct.
just startups. People
Correct.
established as well, like yourself, who's had a number of businesses, who's been in this trade for a long time.
Yes.
You're still having the same things, right?
100%. And when you look behind or try and understand the journey of successful businesses, some of the even billionaires that we look at, you look in their history and look in their past, they had these dark days as well.
But no one talks about them, right?
No.
So this is where you said mindset, and you mentioned at the beginning of the podcast talking about the end goal.
Yes.
If you know what the outcome is, it's easy to work with, right?
Yes. 100%.
And then it's just how you keep motivated and focused.
Yeah.
And it's that classic scenario, how do I get to work with a smile on my face, right?
Yes.
And that's all it's about today.
Because what happens is when we transcend or transition through these phases of business, it's not just the money, we change as people. And that change is like when a kid's growing, they're growing pains. It's difficult.
So you become difficult at one stage, and he also humbles you in the future as well.
100%.
There's two parts of business, right?
Yeah.
There's a growth phase in the beginning where you're thriving.
Yeah.
You're really hungry, you're aggressive, you're building things. But then it comes to a point where, okay, now it's humble bit, then you grow it differently.
Yeah. And you will be a different person.
Yeah, it's like having kids, right?
Yes.
It humbles you in the process, yeah?
Yes.
Prior to that, you're like nothing, you're unstoppable.
Exactly.
When you have a child, you think, okay, now it's got to step back a little bit. I've got to be a bit more safe, a bit more cautious. I've got someone else to think about.
Yeah.
And this is how people need to treat their businesses, right? So treat your business like your baby, understand it, nurture it, and grow it.
Exactly.
So what would you say for a business starting off? What tools could they use? You know, some people may have Zero and a few other bits and pieces.
Yes.
But as a startup, it's very daunting to look at a spreadsheet and which columns do you fill in, what columns don't you fill in?
I would highly recommend the accounting software. I think there's loads of players in the market now, but for a number of years, Xero and QuickBooks have kind of dominated the market, right? And they still hold a big share of the market. But there's a number of big players. Because one of the things that the Xeros and QuickBooks had is the compatibility and the add-ons, the bolt-ons that can come in, whether it's your CRM, whether it's your forecasting software, whether it's your payments, POC system for taking money. But now the market's a bit wider open, and you have people like Free Agent. I think they come free with your HSBC or NatWest bank accounts. So
there's tools out there. So in summary for all of this, people just need to utilize what's out there.
100%.
Use a bit of tech. Instead of writing things on the back of a fag packet or a back of an Excel spreadsheet, which doesn't make any sense, just get methodical, right?
Yeah.
Because an accountant it's a methodical process.
Correct.
It's like you got to follow certain steps to get the end result. So if you can follow a methodical way of doing things, it's like making a cup of tea.
Mm-hmm.
If you didn't boil the kettle first and you've done it right at the end after you made the tea, this doesn't work. You got to follow it in a methodical process, right?
Correct.
You know, there's steps involved to get where you need to be, but then that becomes a subconscious level. And this is diving deeper into a whole different kettle of fish right now. But I
think just a small point there, when you link that back to people's goals, so in terms of goals, say, I want to exit, I want to sell at some point, I want to because I want to scale, I want to raise funding.
They want to improve the EBITDA, they want to grow how much the business is
I want to
worth.
attract investors.
Yeah.
Having these kind of tools and processes in place, it really makes it more attractable to these guys. You know, having your cash flow and things that you can show and say, look, this is how we've been performing the last 3 years.
It's a bit like a recipe book, right?
It is, yes.
It's a bit like a recipe book. You've got the foundation set correctly.
Yeah.
You can build upon that. You can grow it. scale it up to go with
Yeah.
it from there as well.
Yeah.
So, in summary, what advice would you tell a new business or an established business how to keep motivated? How would you keep them going when things aren't great with their accountant? What would you tell them to do?
I think focus on the destination. You know, like when you go on a plane and the pilot he's heading to New York as an example, because he knows where he's going, he then has a number of things that he needs to get right. He needs to get fuel, he needs to have all the, there's enough food, the crew. And if he didn't have that goal in mind, that destination, there's a risk that he could just be sort of wasting time, or he might not be motivated. But when you have things that you have to do to get where you're trying to get, it should keep you more motivated. It should give you direction and
So
purpose.
direction's key, right?
Yeah.
So on that note, we're going to end today's podcast. As my good friend Chidi would say, destination's key. Please like, subscribe and follow us. That's ATZ Finance. Really happy for you to watch us and see where we go from there. Thank you very much indeed. Have a great day.
Thank you.